Hello guys, welcome back to Everything You Know. So today I'll be talking about the stock market and all the basic stuff you need to get into knowing and basically starting how to know all the basic stuff in order to be a successful trader. So not to be one of those 90% of the people who don't make money, they lose money, and only 10% of them make money. So in this video I'll be talking about how to basically choose a right platform you want and choose what kind of indicators you are going to use and support and resistance and all the other good stuff. So stay tuned. Hey guys, welcome back. So the first topic we're going to talk about is choosing the right type of platform for your stock trading or brokerage account. So there's two main ones, I guess you could say, that I'm going to talk about today. The first one is Td Ameritrade and the second one is Robinhood. So Td Ameritrade is a really good company, and the benefit is that of having them as your stock trading brokerage account is you would get to learn about there's like a lot of educational videos in there, and there's also you could get up to $600 and trade commission free for 60 days when there's like regulations, like not regulations, but you have to deposit $3,000, which is a lot of money, but if you have the 3,000, why not go for it and get those free $600 of free trading. And let's see, if we go here, why TD Ameritrade? As you see, they have a good, powerful software. This is a think or swim software where you could have a lot of good indicators and all the good data that you could use to make a better judgment on your trades. Also, it is right here, $695, like the commission every trade. You buy one share, or depends how many you buy. Like you could buy 50, it's still $695, and you sell that 50, it's another $695 commission. So that's the bad part. But then if you invest, like if you put $3,000 in the first place, you get $600 of free commission for 60 days. And the second one I'm going to talk about is Robinhood right here. As you see, Robinhood, basically there's no commission at all, which is great. But the downside is that you don't get a lot of good data and softwares, and the trades don't execute as smoothly. But it gets the work done for a beginner, and if you're learning, you could basically, I would recommend starting off with Robinhood because you don't waste a lot of money wasting in commissions. As you see, they're getting better and better every day, but it'll take them a while to basically held up expectations like TD Ameritrade and stuff like that. They have started like a new web program where you could basically, not a web program, I guess you could say a website, like where you could trade from the computer. First they didn't have all that stuff, and they're adding a lot of stuff. Like they just recently added, like a couple of months ago, options trading and cryptocurrency and stuff like that. And yeah, this is basically about it. There's not a lot of options in Robinhood, sorry, that you could really do. But the benefit of having TD Ameritrade right here is that their customer service right here, as you see, you get 24/7. Contact them; they'll like respond to your calls. But then for Robinhood, it's really hard. Like I don't think they have a phone number anymore, but you have to email them and get back to them. So these are the two main ones. If I'm gonna recommend you start off with Robinhood, which is the one I use, and I'll show you one executed trade at the end of this video. So stay tuned. How I'm gonna make some money in options trading and stuff. So if you're a beginner, go with Robinhood for sure. If you have the 3,000, why not just go for TD Ameritrade? And the one other recommendation is that you should start paper trading with the TD Ameritrade platform, where it's free, and like you don't need anything. Like you just need to enter some information, and you'll have, I think, 60 days of free trading for paper trading. They give you like 200K just to mess around and stuff like that. So it's fake money, but the downside is that there's no emotion to it. You don't feel it, that you don't feel the money losing and stuff like that. So yeah, I guess the first thing, if you want to start off with paper money from TD Ameritrade, or you could do this. You could open up a Robinhood account and also a TD Ameritrade account where you don't put any money in there, and just download their software and stuff and paper trade and use the software to execute your trade on Robinhood. That is what I should do sometimes, but I don't really have that much time. So yeah. So I'll meet you at the next topic. So let's talk about our second topic, which is support and resistance. Every trader should know how to identify a support and a resistance before they get into a market, just to get all the basic understandings and stuff like that. So when a stock is trading down, as you see in this example right here, it usually like comes near its support line, which is a line that is drawn by you. where you could identify like there's a bounce here, there's a bounce here, there's a bounce here, there's multiple bounces here. So you could draw that line and you could say that that's a support because it usually comes to that price. And you could also draw a resistance line. Usually it bounces, like comes down. The stock comes down from here, as you see right here. So this is a resistance line. So basically, when a stock is near its support line, it's a good buy. And when a stock is near its resistance line, it's a good sell. So basically, buy low, sell high, buy low, sell high, buy low, and then sell high. So it doesn't guarantee that it should follow this pattern, but there's more like chances for you to basically make a good return off of your investment right here. Let me show you a good example right here. So this is a natural gas ETF, which is like a stock. The ticker symbol is DGAS, I believe so, right here. Yep. And as you see, this is just a 10-day analysis, 10-day chart. I already identify a pattern right here. The support is basically around $50. As you see, it bounced right here multiple times, right here multiple times. So it goes under $50 sometimes, but then it comes back up and like consolidates a little bit. So I see a support at $50 if you could identify that. And if you're on Td Ameritrade's Thinkorswim platform, you could draw a line right here with the editing charts and stuff like that, which I'm not using right now because I'm on a different computer. And also, I identify a resistance line around $65 or $63 right here, and you could draw that line right here, as I said. So basically, you could buy low and sell high. So our next topic, I'll meet you there. So welcome back to the third topic, and our third topic is about the cup and handle pattern, as you see right here. We're going to talk about all the different kinds of patterns. So the first pattern we're going to talk about is the cup and handle pattern. It's basically a pattern when a stock is on a downtrend near the cup, as you see in the diagram there, and it tries to pick it up by volume or another outside news, or depending on the situation, it tries to recover and tries to go up. And as you see, we can see the cup in the diagram right here, and you could also see handle right here. And it could take up to several weeks or 7 weeks or around 65 weeks. It doesn't really matter. It depends on the news and the reasons why, and then the volume and it's like also a U shape. The second pattern is basically a rounding bottom, which is same as the cup and handle pattern, but it's basically doesn't have the handle. As you see, when in the cup and handle, as we saw previously, it bounced on the cup and then it went to the handle and it came a little bit down. But in this kind of rounding bottom pattern, there's like a downtrend or like a dip, I guess, and then it tries to recover in that round shape pattern. And there's also the line, as we talked about previously, like a support and resistance line, as we see in this kind of a pattern-based graph. It breaks it and tries to go way beyond that line. And when it crosses below that line, there's a downtrend and kind of forms a rounding bottom pattern. The third pattern we're going to talk about is a ascending triangle pattern, which is basically an ascending upward pattern, where, as you see in the graph below, the first triangle right there, there's like a line, like it tries to peak at that line, and then it falls down, the stock falls down, and it goes up another same to that line, but it makes lower lows, as you see right there. It's not going as down as it went previously, and it keeps on doing that until there's like a breakout pattern, like as you see above that, and it just keeps on going up. So that's basically an ascending upward trending pattern right there. The fourth pattern, as you see right here, is a descending triangle pattern. Basically, in the previous example, it made lower lows, but in this example, as you see right there, the stock is making higher. First, it's at a higher point, and then it's making a lower high point. Basically, it's not going as up as previously. So it keeps on going until the breakout pattern, and then it just keeps on going trending down. So that's basically a descending triangle pattern. The fifth type of pattern is a double top pattern. Basically, it makes a first top, like a high point, and then it comes down on the support line, makes a second top, comes back down on the support line, but there's no third top, or it keeps on going down and just breaks out the pattern. And there's also another point, as we see right here, head and shoulders top pattern. Basically, there's like two small left shoulders and right shoulders. It goes up, comes down, and makes even a higher, basically called a head. It comes back down, makes a not that big, like kind of like the shoulder size, makes the shoulder, and then it comes back down and breaks the pattern. So these are basically all the other patterns that there are, and there's also more patterns. These are just like the basic ones that I just want to get all of you guys introduced to, so you guys know what you're doing. So the next thing we're going to talk about is about different kind of indicators that you could use when you're analyzing or before you're going to buy a stock. So right here I have 3, 4, 5 different indicators that I'm going to show you. There are multiple more indicators you could use, but I'm just going to get you started with the basic ones. So the first one, as you see right here, is volume. Right here, volume, when there's high volume, there's high demand for the stock. There's been trading, like buying and selling a lot, which is a good thing. When you have high volume, there's a lot of fluctuation in the stock. It's more volatile, and it tends to go up, as you see right here. Because and also it's like low right here, so people try to buy a lot of shares and of a company and try to trade it, so it's in their benefits. The second thing I want to talk about is a MACD indicator. And here, let's go in the 5-day chart right here. I'll give you a better example, as you see. So MACD, as you see, when it's down, like when a stock is going down, the MACD right here, it's way down. And it's when it tries to recover, it tries to come back up, and then there's this middle line right here. And when it tries to come back up, it will try to plot basically these kind of small points and try to come up with a direction of which side the stock will flow. And as you see right here, there's a low point right here, and it's trying to recover. Also right here, there's like a break even, I guess you could say, but it's trying to recover right here. And MACD is basically when it's at the peak, it's basically a sell time. And when it's like a peak in the bottom side, then you could buy it. So it's basically buy low, sell high concept, but a more better understanding when you have more kind of indicators and stuff. So the next type of indicator I'll talk about is the exponential moving average, which is the EMA, which is the black line right here. As you see, when the EMA is pointing up, which what I mean is that, for example, this is the line right here, the black line you see, and if you draw an arrow, it's pointing up, right? That means the EMA is going up. So basically, when the when a stock crosses the EMA line and starts to bounce on the EMA line, when the EMA is pointing up, it shows that a stock is moving up. And when it crosses below, you're not sure, but like it consolidates on the EMA line and it's trending up. So when the EMA line is pointing up, it goes up. And when the EMA is trying to like point down and it crosses below the EMA line right here, as you see, it's a break-off pattern of the EMA line and it starts to trend down. And that EMA line, when it's broken down, it becomes a resistance basically. And it tries to like go up above that, and if it consolidates and goes back up right here, as you see, it tries to go up above it and try to consolidate on that line, and it goes back up. So when it's going below the EMA line, don't buy. It's like a sell opportunity, like sell it before you make a big loss or something like that. And the next type of indicator I'm going to talk about is the SMA. It's like the EMA, but there's a different calculation of it. And it's basically, you could use the SMA for like bigger, like 6-month charts, and you could change this period to like 180, or depending on your like comfort level and how you could adjust with the line based on the charts and how like it's more far away from the graph, the line. So it's basically another type of indicator where it's the same thing as an EMA, but there's like a lot of different calculations, as I said before. The exponential moving average is a different calculation compared to the simple moving average. And if you want a more in-depth video, you could leave it in the comments below. I could make one for you guys. Or you could also search it up online. It's not that big of a deal. And yeah, there's also multiple different indicators right here, as you see. And there's way even more. These are just the basic 5 that you should be aware of, and they're probably used more often compared to the different indicators. And yeah, meet you at the next topic. The last thing I'm going to be talking about is basically one of my trades right here, as you see, that I've done. I've bought an option on Amazon, which is basically like a stock, but it's kind of different. An option is basically a cheaper price for 100 shares of Amazon. Amazon is like too expensive, like 1,700 right now. It's 1,767, but which is way expensive to buy 100 shares. The cheaper option would be to buy an option, which is basically a contract for a duration of time. And as you see right here, my profits, but like I'm gonna buy another option to average down, and I'm gonna put right here one contract, which is 100 shares, as you see to the left. And I'm gonna put a limit price, so basically means what price I want to buy it at. And it's a put basically, so I'm investing in an option saying that the stock will go down, so and I'll make money off of that. And right here, as you see, one option is 100 shares, and for that 100 shares, it's like around $1,530, as I see right there. And I'm gonna put it not for $30, but like for $1,525. So once it reaches that price, it'll be added to my account. And right here, as you see, the next part, it's the second clip that I've recorded. The option based, like not the option, the stock went down, way down, so which I invested in the market to sell. And right here, I'm gonna sell it for a way big of a profit based on the average that it was calculated, around like $810 that I will cover, which it will be, as you see, it just got executed. And here, let me just go to Amazon and then let's go down. As you see right here, I bought 3 times and sold all of them at once. And yeah, that's basically how you could trade. And I was recording, I recorded this trade already, so in school, which I've taken during my English class, as you see right there. And yeah, have a good one, guys. Stay tuned for more videos. Give this video a like, comment, and subscribe. And yeah, have a good one.